Hey there, fellow investors! Welcome back to our channel. Today we have a fantastic topic for you: dividend investing for beginners. We're going to cover everything you need to know. So let's get started counting coins. Let's kick things off by understanding the basics. Dividends are payments made by a company to its shareholders. It's like your slice of the company's profits. When investing, look for stocks with a history of paying consistent dividends. Now, why should you invest in dividend-paying stocks? Dividends provide a steady stream of income, even in turbulent markets. You can use them to pay bills or reinvest for more growth. Diversify your portfolio with different sectors to spread risk while focusing on dividend history and company stability. Dividend yield is crucial. It's the percentage of the stock price paid as dividends each year. Higher yield means more income, but it can also indicate risk. Seek a balance between yield and safety. A too high yield might be unsustainable. For stability, consider dividend aristocrats. These companies have a history of increasing dividends for at least 25 years. They've got a proven track record. However, they might not always offer the highest yields, so balance them with other stocks in your portfolio. Building a dividend portfolio is all about balance. Mix dividend-paying stocks for income and growth stocks for potential gains. Diversify, but keep it simple. Use a blend of different industries to reduce risk and ensure long-term sustainability. It's time to talk about dividend reinvestment plans, or DRIPs. They reinvest your dividends automatically, buying more shares to compound your wealth. It's a game changer. Remember, DRIPs are excellent for the long term, but unsuitable if you need the income now. Before you dive in, be aware of the risks. Common pitfalls include overextending into high-yield but risky stocks and not considering inflation's impact on your future income. Ensure you have an emergency fund and diversify to manage risks effectively. One crucial aspect to consider is the tax treatment of dividends. Depending on your country and tax laws, dividend income may be taxed differently. It's essential to be aware of this when planning your dividend investments. Seek advice from a tax professional to optimize your tax strategy. Finally, remember that staying informed about the companies you invest in is crucial. Keep an eye on their financial health and the overall market conditions. Also, maintain a long-term perspective. Dividend investing is about building wealth over time. It's not a get-rich-quick scheme, so be patient and stay the course. That concludes our guide on dividend investing for beginners, from the basics to tax considerations and the importance of staying informed. If you found this video helpful, please give it a thumbs up and subscribe for more financial wisdom. Go out there, do your research, and start building your wealth. Thanks for watching, keep counting coins, and we'll see you in the next video.